Hello, have a pleasant day. Today's class is amalgamation in the nature of merger. Particularly, we are going to see the problem. I'm Dr. Srimati from Dr. Ambedkar Global Law Institute, Tirupati. Let us see the problem. The following are the balance sheet of Ashok Company Limited and Balu Company Limited on 30th September 2018. So, two companies balance sheet they are giving. So, first it's with Ashok Company Limited, and this is about the balance sheet, asset side and liability side as there. And share capital 50,000 equity shares fully paid, general reserve, profit and loss account, 12% debentures, trade creditors, employee provident fund. And then buildings, machinery, stock, debtors, cash, everything is available. And let us see the Balu Company Limited balance sheet. And this is about a share capital 30,000 equity shares of rupees 10 each and creditors alone. And machinery, stock, debtors and provision for doubtful debts is there and cash is 5,000. So the two companies balance sheet we come to know, and the additional information is the two companies agrees to amalgamate. That is, they are going to amalgamate and form a new company called Chakra Limited, which take over all the assets and liabilities of both the companies on 1st October 2018. So the two companies they are amalgamating, Ashok Company and Balu Company amalgamating and forming a new company called Chakra Company Limited. So the purchase consideration is agreed at 6,61,500 and 3,15,000 for Ashok and Balu Company Limited respectively. And the entire purchase price is to be paid by Chakra Company Limited in fully paid equity shares of rupees 10 each. So this is about the purchase consideration to be paid by shares of 10 each. The debentures of Ashok Company Limited will be converted into equivalent number of debentures of Chakra Company Limited. The debentures converted into debentures only. And give journal entries to close the books of Ashok Company Limited and Balu Company Limited. Also show the opening entries in the books of Chakra Limited. Also prepare the opening balance sheet in the books of Chakra Limited as on 1st October 2018. So the Chakra Limited authorized capital is 2 lakh equity shares of rupees 10 each. So this is about the information which is available. So now we want to close the Ashok Company's balance sheet. That is, assets and liabilities should be closed off. So journal entries in the books of Ashok Company Limited, all the entries that is going to be done on 1st October 2018. Since I shouldn't give you the date column, that's why I have given here, and everything is in rupees. So the realization account data, this amount will be totaled lastly to buildings account, to machinery, to stock, debtors and then cash. The total is 8,65,000 amount. So this is about a narration. And 12% debentures account, trade creditors, employee provident fund to realization account. Liabilities transferred. So Chakra Limited purchase consideration, this is to realization. And then shareholders account data to realization account. This is the last, you will get it only when you prepare a realization account. That is transferred to equity shareholders. And then equity shares in Chakra Limited and then to Chakra Company Limited. This is for purchase consideration paid. And equity share capital, general reserve, profit and loss account, whatever it is, capital plus accumulated profits transferred to equity shareholders, then equity shareholders to shares in Chakra Limited. Final payment to equity shareholders. That's all. No more entries in the Ashok Company Limited. And then realization account data to machinery account, to stock, to debtors, to cash account, then being transfer of sundry assets in the books of Balu Company Limited, and provision for doubtful debts, trade creditors goes to realization, and then being transfer of sundry liabilities at their book value. And Chakra Company Limited to realization, purchase consideration due and realization to equity shareholders. This is about, it's about a profit when you prepare a realization account. Then equity shares in Chakra Limited to Chakra Limited. This is for being a receipt of purchase consideration. So equity share capital to equity shareholders, transfer being share capital. Equity shareholders account data to Chakra Limited. Final payment. So journal entries. This is opening journal entries in the books of Chakra Company Limited. So purchase consideration, liquidator as Ashok Company Limited, liquidator of Balu Company Limited. So this is amalgamation of two companies due. And buildings, machinery, stock, debtors, cash, everything added for both the companies. 2. Provision for doubtful debts. 2. 12% debentures in Ashok Company Limited. 2. Trade creditors. 2. Employee provident fund. 2. Profit and loss account. All this, both the companies' assets and liabilities are added and given here. And then to purchase, business purchase. So the difference between is transferred to capital reserve. So liquidator of Ashok, liquidator of Balu Company Limited. This is for purchase consideration that is paid in way of equity share capital. So allotment of 97,650 equity shares of rupees 10 each. So 12% debentures in Ashok Company Limited has taken to 12% debentures in Chakra. So instead of naming the same company, just left it. So to 12% debentures 1 lakh being transfer of issued price 12% debentures in Ashok. So the profit and loss, how it has been arrived means amount of share capital, both the companies purchase consideration has 6,61,500 or 3,15,000. So there is about a loss on amalgamation is 1,61,500 from Ashok and 15,000 from Balu. So the total difference 1,76,500 should be adjusted against the reserves and profit and loss account. How it should be done means the combined and separate entries given. General reserve available in the balance sheet is 1,70,000. So first we are adjusting 1,70,000 and balance is 6,500 that should be taken out of profit and loss account. So the rest of the profit and loss account balance is 23,500. Then we can have this total. If not necessary, leave it. On balance sheet of Chakra Company Limited on 1st October. Just combining. See here the share capital, authorized capital 2 lakh equity shares of rupees 10 each given in the adjustment. So that we have to take in and write it here, but it should not be taken to calculation. Then as such 97,650 equity shares of rupees 10 each fully paid up. Reserves and surplus, profit and loss account just calculated 23,500 and secured loan 12% debentures of rupees 10 each, 100 each. Fixed assets, everything the total. Debtors also total less provision for doubtful debts, cash in hand. And this is again in balance sheet only, in spite of the space hindrance I have given again. So current liabilities, trade creditors, and then employee provident fund. Asset side nothing with loans and advances and miscellaneous expenses. So the total of the balance sheet is 12,05,000. This is how you have to done in case of amalgamation in the nature of merger. Hope you understood. Until the next, it's bye from Srimati. Thank you.